Welcome back. The conversations continue here on a very cold Davos. We've literally been caught in the middle of a snowstorm over the last hour or so. And joining us now here is Parth Jindal to take us through what the outlook looks like for the cement and the paints business, and more importantly, their plans on the EV side as well. As you heard from Mr. Shereen Bhan here on CNBC-TV18 in Davos, they hope to put their first car out in the market in 18 months from now. Parth, many thanks for joining us here in Davos. Let's start by talking to you about the outlook as far as cement is concerned. In terms of demand and consumption, what's the story looking like at this point in time? Because there has been some softness.
Yeah, no, it's been a very tough year, I would say. The first 9 months of the year, due to, I guess, the general elections and a lot of state elections and the change of, ministries and all, the infrastructure spending that was supposed to happen has not happened. Government had allocated 11 lakh crores for infrastructure, and as per November end, only 46% of that had been spent. So we do think that the government is going to try and make up in the fourth quarter. But even then, it's going to be well short of the 11 lakh crores. Now, with everything having settled down, we are seeing the demand coming back to normal. December as a month was strong, and we do believe fourth quarter will be strong from a demand point of view. Obviously, from a competition standpoint, things cannot get more intense as they are right now. So because of competition intensity, there's a lot of jostling of market share.
Yes.
It doesn't really move the needle much, but everyone thinks that they're moving the needle. And that's keeping prices at very subdued levels.
Let's talk about competition, and let's also talk about consolidation. Don't you want to be a part of any of the deal making that's going on?
No, of course. I mean, we were in the race for Wholesome.
Yes.
We tried very hard, and it went somewhere else. But for our company, which is a relatively young company, we've just got the approval to IPO the business. We are, I would say, the 9th or 10th largest cement player in the country at around 21 million tons now. I think the trade-off is buying versus building. And, because of the competition intensity, people are paying a very high price, or I would say, more than replacement cost for acquisitions. And also in some geographies which are not really value accretive. If you look at South, it's already oversupplied, and there's been so much consolidation, and there's more going to happen. So we as a company want to become a pan-India player. And if I spend resources in acquiring something, then my own organic plans will take a back seat, because I don't have the balance sheet to really go for both. So we're going to IPO. Once we IPO, then I think with the liquidity we'll get, we could look at entering the competition for these assets.
So, as and when you IPO and you look at possibly picking up assets at a price that makes sense to you and that is economically viable as well, any specific geographies that you intend to focus on? Because as you pointed out, the South is already oversupplied.
Yeah, I think there's a lot of excitement and a lot of interest in the Northeast. I think with the announcements that have been made by the Honorable Prime Minister and the kind of infrastructure work that's going to happen, I think that's a very attractive market. I think the North remains very attractive in general, with the demand-supply situation being the closest in terms of there is not much overcapacity there. So North remains exciting, and Central. So as an organization, as a company, we are today present in the South, the West and the East. Now we're looking at entering the North, the Northeast and Central. I think these three areas, we expect growth to outpace the rest of the country.
And anything there on the radar as far as possible targets are concerned?
I'm not sure. I think we all saw the news with Star Cement and what's happening there. There are some other companies in the Northeast as well, I think, looking at solutions. In the North, I think everyone is doing really well. So unless you overpay, you're not going to get something. So I think you have to build. And there could be some residual assets of JP available. There could be others as well. So in Central. So we are studying everything, and as soon as our IPO is done, we'll look at that.
So let's talk about the IPO. What's the debt at this point in time as you move forward with hitting the market?
We are at about 4,000 crores of net debt as a company, and once we IPO, some of the proceeds will go towards paring down the debt, but most of the proceeds are going towards our greenfield project in Rajasthan, where we're building a 5 million ton plant in Nagaur, where work has already begun.
Okay, so what will that 21 million tons be over the next few years? since you are talking about betting on building yourself?
Yeah, so over the next 3 years, we have a plan to get to 40 million, and then after that to get to 60. So currently with the limestone mines and deposits that we have acquired through the e-auction process and all the brownfield and greenfield sites that we have in place, we have a roadmap to get to 60 million. The ambition is to be a 100 million ton player, but that's more medium term. And in order to go from 60 to 100, we will need to look at inorganic opportunities as well.
So 260, you'll be able to do it by yourself?
Yes.
Organically?
Organically.
And 60 to 100 is when you will possibly look at inorganic opportunities as and when they present themselves at the right price?
Absolutely. No, I think during the journey of going from 20 to 60, we can get to 60 on our own. But during that journey, I'm sure some inorganic opportunities will come up. And then we will have to, take that on and pause a little bit of our organic plans. Unless the balance sheet can support both, then we'll do both.
You talked about prices. Mr. Gadkari is back again making his comments as far as cement cartelization is concerned. He's been saying this for the last several years now, in fact, going back at least a few years. How do you respond to the charge that there is cartelization within the cement sector? And this is something that the Competition Commission has not just looked at, but has also delivered a verdict on previously.
So I can't comment on what's happened in the past, but right now I can tell you that the cement industry has been given a very bad image for no reason. If you look at the CAGR of price growth in the Indian cement industry over the last 10 years, it's less than 1%. In fact, cement is cheaper in India than potatoes are, right? And I think we need to ask the question as to why this image is there. When large companies are making losses in the cement industry. You look at India Cement, just announced a loss. You look at Nuvoco, they've just announced a loss. Profitability is at an all-time low. EBITDA margins are at an all-time low. And competition intensity is at an all-time high. So I really don't understand these comments that are coming in for cement. Steel as well. I saw the comment on steel as well. And you've spoken to my father. We are talking to the government on dumping, safeguard duties. And, profitability in steel is also at an all-time low. Very large businesses in India are making losses in steel. So I think there is some sort of a misconception here. And I can say it, very confidently and with a lot of sincerity that there is absolutely no truth in these claims.
Well, the government will perhaps go back again to the CCI, and I understand that the CCI is currently also looking at a previous complaint. But as I pointed out, this is not something new that Mr. Gadkari said. But, given what you said, that competition at an all-time high, profitability at an all-time low at this point in time, how does that then back up the kind of expansion plans that you have?
No, I think in terms of India as a growth story, there's no doubt that the cement demand, the steel demand in India is only going to grow. This is a temporary phenomena where people are in a quest to consolidate, keeping prices, according to me, in a quest to consolidate, the large players are keeping prices artificially low in order to squeeze out the marginal players and consolidate the industry. And we're seeing almost like a telecom-like phenomenon in cement. And I think that's led to a lot of consolidation. Last year was probably the highest number of acquisitions that ever happened in the cement industry. And I think this trend is going to continue for a few years. Now, when you come to expansion, I think if you look at this year would be an aberration where cement demand would grow at maybe 3 to 4% for the whole year. But we expect cement demand to grow in lockstep with GDP growth and maybe slightly faster than that. So we're looking at 7 to 8% growth in cement in the medium term. And that means about 35 to 50 million tons of incremental cement demand is going to be coming every single year. And the other thing is, if you want to remain relevant in cement, you've got to have at least a 10% market share. Otherwise, there's going to be a threat of consolidation even on your company. So if I don't get there, I'm a very big target for the bigger guys. So I think it's a balance that one needs to create. And also, if you look at our expansion plans, we are expanding only in those geographies where we're seeing a supply-demand equilibrium. And we're seeing that, we can enter that space. Now, if I were to add more capacity in the south or more capacity in the east, I think that's not really required because there is an excess capacity. But in markets like central, north, northeast, if you expand there, I think it'll get consumed.
So what is the current market share, even though that you said that the needle isn't moving too much at this point in time, even with all the competitive intensity, but what is your current market share?
Oh, it's very small. We would be about 3.5% on a pan-India level. So if Indian cement demand, we would be about 3.5%, and our ambition is to get to 10%, and that's going to be happening over the next few years.
5?
By 2030, we should be 10%.
By 2030 is the expectation. Let's also talk about the paints business then. Similar story, I would imagine, that's playing out for cement is also impacting the paint sector today. Where do you stand on that front? Because again, that's also gotten fiercely competitive.
Yeah, I think with JSW first and then Birla's entering, I think the industry has definitely heated up, and it's led to the first bout of consolidation with Akzo Nobel putting its India assets on the block. So I think today, we are a 5.
Did you consider looking at that?
We just submitted our bid.
Okay.
We submitted a non-binding bid. The first round's bids were submitted on the 22nd of January. So we are very much looking at that asset. So we are today, 2,500 crore company, 5th largest in the paint space, and we are a 5-year-old company. Obviously, there's been a lot of noise with the entry of Birla's and the kind of investments that they have made. And we've all seen what's happened to the market share of the larger players. We'd like to think we played a small role in that, and Mr. Birla played a bigger role in that. But overall, I think my true belief is that the paint industry is not a winner-take-all market. It's not a capacity-driven market. You can't just build plants and expect the consumer to choose your paint. I think there's a lot of brand equity that has been created over the years by the incumbents. And this is an industry where you need to win the micro battles. You need to win over the influencers, whether it's the contractors, the painters, the interior designers, the architects, and finally the end consumer needs to select your paint. So it's been an interesting journey. It's completely B2C, and it's the first time JSW Group had gone into B2C. Now with automobiles, that's the second one. But it's exciting, and I think the Akzo Nobel opportunity is a really exciting one. And whoever gets it will really have a shot at being in the top 3 for a long time.
We don't know how that will pan out, but of course, as you pointed out, you've already put your bid in. But the synergies between the cement and the paints business, as you kind of grow both these out, what do you see happening on that front?
So the synergy is not much on the grey cement business and the paint business. There is synergies on the white cement business and the paint business, because the putty, which is made to prepare the wall surface, is made out of white cement. So hence you have players like Birla's and JK entering paint, because they had the distribution network of the white cement. Right. They being the largest players. Now you have Asian Paints entering white cement. You have JSW entering white cement as well, more as a defense mechanism to protect our network. So I don't see much of a synergy from a network point of view for our cement and paint business. However, from a real estate point of view, from a B2B point of view, today we are selling our steel, our cement, our paint as one offering to all the large contractors and large real estate players. That's resulted in a lot of success for the group, because we can offer it as one suite. And if they do a certain volume, if they do a certain value, they get a discount on the whole basket of products. And we heard a lot from our real estate players that, dealing with separate companies is such a pain. Why can't you just be creating a one-stop shop solution? We've also launched JSW One in order to offer this online. So this is helping us grow faster than the market.
coming back to valuations, is it a much more reasonable race in the paint side of the business as opposed to the cement side of the business, since you're looking at Akzo Nobel today?
So I think the thing with paint is valuations have definitely gone off their highs. You know, what they were when I started this company and what they are today, they've almost halved in terms of value. The second thing is it's a very similar story to the Wholesome story. That kind of asset is never going to be available again in this country. It's a generational asset. It's going to take me 18 years from the time I started JSW Cement to build 60 million tons of capacity if everything goes well. And that was a 70 million ton asset which got sold. Similarly with Akzo Nobel, it's taken me 5 years to get to 2,500 crores. It'll probably take me another 2 years to get to 4,000 crores. So it's taken 7 years to get to 4,000, and you can buy something which is 4,000 overnight. So it's that type of asset, and hence I do think is going to be fiercely competed for. We will again look at value versus buying versus building, but having lost out on Wholesome.
Are you willing to take a bigger bite? Do you have more risk appetite this time around?
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for Akzo.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
And you've tied up the private equity already?
Yeah, we have interest from a few players, but we are still in discussions. We've put in our bid at JSW Paints. Once we know that things are progressing, we'll
Is there any indication of the timeline?
I would assume it will happen within the first half of this calendar year.
Okay, first half of 2025. Let's talk about the new B2C business, and which is the automobile business. And, you know, I was speaking with your father, and he said in 18 months, that's the target, that you hope to have the car on Indian roads. But the technology partner, I am given to understand that you're talking to Chinese players at this point in time. How close are you to be able to close those conversations and actually result in a deal?
I think it's almost at the verge of finalization. I would like to say that within this quarter, the announcements will be made on who the technology partner is, what kind of agreement it is.
And it is Chinese?
It is a Chinese global player who has successfully demonstrated in China and as well as abroad. So there will be bits and pieces coming from China, bits and pieces coming from their global alliances. And that's the way we've structured it, and that's the way they've also wanted to structure it. We have a different partner for the passenger vehicle segment and a different partner for the bus and truck segment. The bus and truck segment is a little bit further along, and I would expect a JSW bus and a JSW truck to be on the roads in 15 months.
Okay.
And the passenger vehicle...
In 15 months?
In 15 months, yeah. And the passenger vehicle one, which my father mentioned, 18 months, I think... He gives us all very good targets, but I think
probably take longer.
I think 2027 is
2027.
2027 is when we'll first have a JSW car on the road.
Okay, so that's interesting. That we'll probably see a bus from the JSW stable on the electric side in the next 15 months, as you point out. But the agreement that you have potentially with this Chinese player, global Chinese player, no equity involvement, or will there be some equity involvement?
No equity involvement. The only equity partner for us will be Shanghai Auto in MG. This is a pure licensing and royalty deal.
Okay, so you know, as you look at some very large businesses that you're managing at this point in time, and you know, there's a lot of room for you potentially to grow, but it's also fiercely competitive. What's the big constraint that you're faced with? What is the big challenge that you deal with?
I think building the organizations, building the teams in order to scale is definitely something that we spend a lot of time on, because we have ambitious plans across all our businesses, whether it's steel, whether it's energy, whether it's infrastructure, cement, paint, automobile. We are also entering new ventures. We're looking at getting into the copper side as well. We're looking at real estate. My sister is driving that. So there's a lot going on at the group, and I think there's such an unbelievable opportunity in India when India is going to grow from 4 trillion to 10 trillion. We're just incredibly fortunate that we are living in India at this point of time. So I think we want to seize that, and I think every state is now becoming more and more supportive, more and more open, and more competitive with each other to draw investment. Like when we announced the 3 lakh crore investment in Maharashtra, and we then went to the Tamil Nadu delegation, they were almost upset. They were like, why have you come here with whatever 10,000 crores when you're investing 3 lakh crores in Maharashtra? What can we do? And it's so incredible to see each state trying to lure industry to them. And this is something that, I think is intuitive, but when I speak to my father, he's like, the country has changed so dramatically. You won't believe how it was and what it's become. So I think we just hope that, the geopolitical risks ease a bit with truce in the Middle East. We hope that is behind us. We hope that President Trump does something in the Russia-Ukraine side as well. And we also hope that, this whole era of protectionism becomes a little bit more consistent, because you can't have one regime saying something and then 4 years later somebody coming and doing the exact opposite. It really makes it very difficult to invest and know whether you're investing in the right thing. Like we in the US were investing big time into our Baytown plate mill for offshore wind. And one of the first tweets put out by the president was that offshore wind is a disaster and it's dependent on government subsidy, and which they're no longer going to pay. So that makes it a bit difficult to predict. But at the same time, we know that with President Trump, he's going to protect the steel industry, so that augurs well overall for our US business. So, but yeah, it's just exciting. I wish you had more hours in the day.
Well, we wish we had more hours to talk to you, but thanks very much, Parth, for a very insightful conversation across each of your businesses, but more importantly also the road ahead and the priorities that you're going to be working with. We wish you the very best of luck.
Thank you.
Thanks very much for joining us here in Davos. Well, that's plenty coming in from Parth Jindal for the cement business, for the paints business, where they are hoping that they can finally get their hands on Akzo Nobel, unlike in the cement side where they lost out. And of course, on the electric mobility side, it's going to be a bus before there's a car from the JSW stable, and that's expected in the next 15 months or so, and a close a deal with a Chinese partner is likely to be inked very, very shortly. We will take a break here, but the conversations will continue. We're back in a moment with more. Stay tuned. You're watching CNBC TV 18.